Everyone. Today is the 18th of February, Tuesday. Had a nice day yesterday. Hope everybody had a great Valentine's weekend. I know I did. Took care of everything I needed to, got a bunch of work done, and here we are into Tuesday. Now, the markets are opening slightly higher right now at basically 612 on the SPY, up about 0.4%. You know that I have been calling for this rotation downward into the deep V patterns that I set up here. I really do believe that the markets are struggling right now to try to maintain any type of upward movement. I would be very cautious of a rollover up in this early morning trading. Let's come down and take a look at an hourly chart so you can see, or a 2 hour chart. So you can see kind of where I'm at with this. As I mentioned just last week to my subscribers, the markets are rather perplexing at the moment. Let me come out here to a 4 hour chart and kind of try to show you. So, in fact, let me come over here, and I think I've got a pretty good display of the data here. Yeah. So here we go. This is the ES. Okay, and you can see that the ES is currently trading at 6,151, below these highs. Really a little bit weaker. We have these dual excess phase peak patterns. If we were to roll at this point, we would roll potentially downward, like I've drawn here, potentially trying to break below this low at the 5,938 and a half, or down to this low here, 5,815 roughly. But we're below this ultimate low right here, and we're struggling around this resistance. Now, given where we're at, the ES is trading, the markets are open. I'm basically looking at potential rejection. I really am looking at rejection up here, kind of a rollover type of a pattern. I think that's the most logical outcome here, given where we're at. Now, if we get some positive news, we could see this push up a little higher, but ultimately, I still believe that we're moving into that extended, consolidated flagging formation, and we just have to wait this out. Now, I am currently sitting on some puts, waiting for this market to kind of break downward. We currently have this type of a channel in place. You can kind of see it coming across here, a broadening megaphone type of a channel. We'll see how this plays out. I mean, honestly, this is just one of those moments in time where, you know, you could argue it could go up, you could argue it could go down. My pattern suggests that we're looking at a deeper low setting up near the end of this week, Friday into Monday, Tuesday, maybe next week. And then we have a bit of a bounce into a March 21st, 22nd, 23rd base, which would put us right over in this area, somewhere over in this area for another low. And I think what we're really looking at here is kind of a rollover, a bounce, and then a roll down into this low, trying to find some support. But we'll see. I mean, at this point, I expected a rollover last week, didn't really show up. There's been a lot of what I call capital shift. Capital shift is money moving around, actively seeking support and security. And of course, as long as the dollar is holding up above 104, 105, the dominance of dollar based assets is going to continue to stay. Now, we did have a big move last week in the global markets. Let's see if that holds up, because it could be a one-off type of move, or it could be a carryover type of move. In other words, moving away from weaker global economies into stronger global economies like the US, UK, Great Britain, possibly China. I would say Japan, but Japan is as a safe haven has always been somewhat tied to the US, particularly going back to the, 70s, 80s, 90s. But we're going to see how this plays out. You know, like I said, I still believe that the deeper downward rotation is going to play out until we clear this level up here. We have not broken up, we have not cleared these levels. And because of that, like I said, I think that we need to be very attentive to the fact that, we could just as easily roll to the downside very aggressively here. So we're at kind of that make or break level. We really are. Right now, we've got 61, 51, 52 roughly right here. We've got to get above this level, this last high level, 62. So it's about 10 points higher. And if we get above that level on a strong close, then we're going to be off to the races to the upside. So really, this is kind of where that line in the sand is right there. 61, 62, roughly 61, 63. So again, a failure here would be a deep rejection to the downside, maybe moving into that low that I expect down here. 5 9 maybe 5,995, 5,990, or roughly, 595 on the SPY. But the SPY, like I said, has already moved above that level right now pre-market. So I think we're going to be looking at a rollover. Now, the QQQ or the Nasdaq, which I'm looking at here, you can easily see the rotation of the excess phase peak pattern coming down to this low, rolling out. We still have not come across this ultimate high level yet. So you can see we're below that ultimate high level. We're rolling out through here. We still have that potential for rolling downward. Now, obviously, the upper range here has set up a little differently. So I would have to drag this upward into this area and leave this out over here. So you can see that if we do still migrate through that, let me get rid of this. If we do still migrate through the megaphone pattern, we're looking at a very broad, widening megaphone pattern. And of course, we could come in here and try to draw some middle level, possibly something like this, indicating where a middle level support channel would be. But again, we're looking here at below the ultimate high. As long as we're below this ultimate high, setting up this excess phase peak pattern, the predominance is going to be a roll to the downside, trying to break below this low. Try to get it as square as I can. And that's going to basically mean that we're going to attempt to come down into this lower level if that breakdown does happen. So we're kind of looking right now to see, are we going to get above this level or are we going to break down? And this is kind of where we're at. My instinct tells me that we are going to try to break down or at least see some sort of a breakdown into that March type of an area. So be aware that I think we're going to see some type of a rolling breakdown here over the next 10, 15, 20 days. And of course, watching what Bitcoin does, watching what gold and silver does is going to be very important. Now, today's cycle pattern is a gap potential. So, we closed at 609.70. We're up on the SPY at 612.09. So again, we've already gotten, this is my other chart. So we'll come here. So we're 612.09. We're already up in this area above this high. If we open at this area, this is going to, be a positive move above the ultimate high level right here. I'll make it nice and dark. But again, whether we hold this level or whether we reject back down is going to be the big question. So, and right now my analysis suggests we're likely to break downward. So I'm going to just forewarn you that, the major lows that are setting up at the end of this week, the beginning of next week, and the secondary low that comes in. So here's the low pattern in this red bar. And then we have another one back over here on March 21st, back over here. That's what these purple are. So in theory, if we get that rejection failure downward, we could easily roll into this move, consolidate, roll back, and then roll into a deeper move here, potentially rolling into those deep lows. But it all really depends on what happens right here, whether we break the new highs or whether we don't. And again, that's something I think we really need to see play out. Okay, so gold and silver, we're looking at back over here. We're looking at a topping pattern in gold and silver. A topping pattern typically means that we are going to be looking at a rolling peak. Now, when I call it a rolling peak, that means we're going to come up, find some resistance level, and roll back downward. That's what a topping pattern typically looks like. So, same kind of thing here. We'd be looking maybe for a breakdown in metals. And when I call it a breakdown, I want you to understand that it's really more of a kind of a rolling topping pattern. I think we're going to be looking at let's see what we have, gap potential, then flat, then inside Arami, then momentum rally on the 25th. So, that really leads me to think that we're going to be moving into, this is a 1 hour chart around the 25th here, some rotation into topping, gapping potentially, and into a base on the 25th, starting a rally. So, maybe something like that. And of course, silver would do something similar out towards the 25th as well, possibly topping up in this area, rolling into some sort of momentum rally out after the 25th, 26th, 27th. And that's again, I think this topping pattern is, if my analysis is correct, it's going to roll into kind of a panic selling mode for gold and silver before we try to rally back out of this. And it really comes down to, we clear this kind of resistance, downward cycle, move into a bit of recovery, which will send gold and likely Bitcoin a little bit higher. And then we move back into weakness the closer we get over here to March 21st, 22nd, possibly setting up this new deeper low. And again, this is just, the analysis playing out here. You can see this rotation. Tried to draw this. It looks a little cluttered, but get rid of that. Here's our deep low setting up for the visual order. Bring to front. Okay, that should be there. And so what we have here, guys, is that deep low setting up. This is where we're at right now, right over here. We're rolling through what may be an upper rejection channel down into this low, maybe rolling back up, maybe up into new highs again, rejecting and moving back down into this deeper low. That's kind of how I see the markets playing out here. Now, these deeper lows, like I mentioned to you, they could be in this 595, 594 area, and maybe down here in this 580, 590 area. Long and short of it is we're looking for some sort of, I think we're going to get into this breakdown after multiple rejections up here. I think these multiple rejections play out kind of like we have here, a breakdown, and then here, potentially a breakdown. I think this is going to be a big old bull trap right over here. Of course, I could be wrong. We could end up breaking to the upside and really taking off, but we'll see. We got to see how this plays out. Again, looking at the ES and the NQ, we're just not getting that breakaway, the same type of breakaway. Could happen today. we're getting upward trending. It could actually start to break away today or it could reject. So let's see how it plays out. Gold and silver we've gone through, and now I'll go over here to Bitcoin. Bitcoin's kind of been all over the place. So this is a 4-hour chart. Wait for it to finish loading. There we go. Squeeze it together. And you can see all my drawing, of the potential breakdown. The fact that Bitcoin has kind of decoupled from the SPY and the QQQ, which it was fairly well coupled with the Nasdaq for a while. While we're moving into this consolidation phase, really, if you look at it, guys, where we're at with this, you can see the failure. You can see the trend channel here. We're kind of holding up above this trend channel. And carry this out a little bit. And, if we get below this trend channel on a big solid breakdown, I think we're going much lower personally. And I think that's where we're looking at this consolidation. Now, we've got a long way to go here in Bitcoin to try to actually recover from this 96,000 area up to this 108 area. I mean, we got $10,000 basically, $8,000, well, actually 12 to try to recover. And we've continued to break down into this consolidation channel. So when we come in here, one second, when we come in here and look where we're at with this purple, this magenta, we've rolled into this consolidation channel. The next phase here, if this continues, is going to be a breakdown to some sort of ultimate low. And remember, that will ideally continue to play out as a broader excess phase peak pattern coming down into here, playing out like this, where we would break this low downward, move into consolidation. So again, we're getting a lot of setups, and it's almost like an evil twin. I hate to say it, where the SPY and the QQQ are pointing to potential higher prices. Gold is weakening, silver is weakening, which means that there's a little bit of panic in the market. And Bitcoin here is really struggling to try to find any chance of success. And I think what's really, taking place here, guys, is go back to the SPY over here. I think what's really happening is that we're rolling into this volatile sideways period. I think we're just rolling into a period of lackluster upward momentum here and rolling into this extended sideways type of pattern. So I would urge you again to stay fairly cautious of any long sides and short sides. You want to play this kind of close to the vest. Could get big explosive moves over the next 20, 30, 40 days on news and or other info. But again, I'm just not seeing a lot of breakaway trending here, not until after March. So I'm going to come back over here. This is my SPY. We'll come back in here to daily. I know I got a lot of stuff on my charts. I get it all the time. But I just want you to be aware that get rid of some of these forward looking scenarios. And I want you to realize that we are struggling to get out of this sideways consolidation. And I really do believe that the breakdowns are going to become very evident. If I am correct, we are going to see moderate breakdowns into the February 21st and then over to the March 21st, 22nd, 23rd area that's going to reflect a downward channel, kind of a downward rotating price move. Okay. All right, so here we go. Like I said, we're moving into tax time as well. Lots of news coming out of DC and elsewhere. There is dominant strength in the US dollar. This is going to continue to drive US investment. I think really though, it's going to have to get through the first quarter. We're going to see what expectations are in the first quarter, how much things have changed here in another 20, 30 days, and whether or not we're going to be looking at continued growth in 2025 or not. Remember, last earnings came in okay. We didn't have stupendous returns. We had moderate returns, a lot of, altered future expectations. And I think that's going to play out here into Q1 of 2025. In other words, Q1 results are probably going to be even more mixed than Q4 2024. Okay, guys, here we go. Let's go get some.